J.P. Morgan is one of the best managed banks there is. Jamie Dimon, the head of it, is one of the smartest backers we got. And they still lost $2 billion in counting. And since these banks are insured, backed up by taxpayers, something called the Volcker rule that says, you know what, if you are a federally insured, supported bank, you can't make bets on your own trades with your own money.
Just approved 2 new rules.
Right.
And so there's a lot going on in the banking industry. The 2 new rules real quickly, they're going to be allowed to invest in more risky ventures like venture capital funds, and margin requirements within the same firm on derivatives is going to be altered so they'll be able to save money. What do you think of those 2 rule changes?
Well, I think they're significantly in the direction of deregulation. That's kind of been the glide path we've been on for several years now, which I think directionally is the wrong way. And we're paying for it now in terms of the what we could have larger capacity for banks to deal with the current pandemic. These 2 specific proposals, I think, are ill-advised, especially as a former chair of the FDIC. It won't surprise you to hear me to say that $40 billion that will no longer be in banks to protect them against derivatives exposures that their affiliates are imposing on them is no longer there. I think that increases risk to the deposit insurance fund. So no, I do think that's ill-advised. And the Volcker rule, they've been loosening that for years now. It's been under constant assault. This, as I understand it, the rule change basically defers to banks to decide what's proprietary or not. We went down that road with risk-based capital because you remember we're basically letting banks decide how much capital they should have prior to the great financial crisis. So been there, done that in a different context. It's not a good idea. So I think very disappointing, but it is what it is. I'm getting used to it with the current. I respect all of them, but I think they are directionally so going the wrong way on all of this.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And this one is on Volcker Rule 2.0. As we can see, the stock market is at its all-time highs. Bitcoin is at its highs. And part of that reason, guys, is due to the Volcker Rule 2.0. And basically all this is about is deregulation. So therefore, they can gamble with more of the bank's money, which is your money. Now, basically, what the Volcker Rule 2.0 did was take away the safety net. So let's get into the actual number. The FDIC banks paid about $30 billion in dividends, guys. $30 billion. Now, of course, guys, that goes to the holding company, and then, of course, it goes to the actual shareholders. Now, if you go to Europe, Europe suspended the dividends and it suspended buybacks. Why? Because they wanted a safety net. They wanted to keep that money. Because basically, if the banks had kept that, and the United States kept that $30 billion, of course that money grows, guys, and your safety net becomes bigger. The whole point of being at the end of a cycle, because right now we're clearly at the end of the cycle, guys. The stock market is at over 30,000. We're clearly at the end. You have to have a safety net. Right now, guys, we have over 20 million people out of work. Small businesses are closing left and right. It was no reason to change the Volcker rule. No reason whatsoever. Only the reason why to change this rule, guys, if you have a plan. And basically, we know what that plan is to destroy this old economy to bring us into the new economy. And that's what's going to happen. We're going to have a big financial crisis. Remember the New World Order? Creates the problem, wait for the reaction, and run in with the solution. We know what that solution is, of course, it's cryptos. But of course, the masses, they don't care about finances. It's boring. And plus, nobody wants to know the truth. Every financial crisis that we've ever had, guys, has been engineered by the banks. We clearly see their hands all over the financial crisis that's going to hit us in 2021. We also see the hands that's behind it that's going to come in with the solution, of course, that is crypto's tokenization, blockchain, algorithms, AI, robots, drones. So we see all of this coming right behind this crisis. In 2008, people lost trust in the banking system. In 2021, people are going to be fed up and not going to have anything to do with the banking system. So what's the solution? Of course, DeFi, these applications, fintech is definitely going to be the replacement of what we have right now due to the engineered crisis. In 2008, of course, we had the housing crisis, in which a lot of the big banks were a part of, especially Goldman Sachs. But you also had a lot of derivative trading. And when it came to JP Morgan almost lost about $5 billion from bad bets. And not for 1 minute do I believe they actually lost $5 billion. They lost the people's money, but they probably was betting against the people. The same way Goldman Sachs were handing out mortgages, but betting on those same mortgages would default. So guys, we have to understand that the bank doesn't lose in this casino game. They never, ever lose. Now, we heard Obama say how great Jamie Dimon is. A lot of people don't know that Jamie Dimon was on the New York Federal Reserve Board. So, guys, that's totally a conflict of interest. But yes, he served for a long time. Of course, after the crisis, after his term was up, of course, he got off of it. But also, Obama talked about the Volcker rule. Now we know they've let up a lot of the regulation. Now the banks don't need a safety net. Now the banks can go back gambling with the people's money. That's FDIC insured, which makes no sense whatsoever, but it makes sense to us because we know what? Babylon ends. And of course, the Chinese dragon rises. And it's not a coincidence that China is running majority of Bitcoin mining. It's not a coincidence that the digital yuan is going to be the first main CBDC. China is leading us into the fourth industrial revolution. While the C word is hurting all these other countries, China is moving like a locomotive. Especially if you look at the Asian countries, they're not being hurt by the C word. Taiwan is actually booming. Guys, remember, everything the New World Order does is already planned out. You have a wonderful night.